Welcome all again for the theory discussion from the recently released question bank. After uploading yesterday's class, I had many positive reviews from students as well as the teachers across the state. And today also, after watching this video or the yesterday's video, if you find it useful and if you have a little appreciation from your heart, kindly put it in the comment box. So without wasting much of time in this all irrelevant discussions, we will start with the topic, today's topic, that is retirement and death of partner. And in this video, I am restricting myself only to this chapter because this is a bit lengthy. There are too many 2 marks questions. So that's why today's discussion only limited to chapter 3, that is reconstitution, and in that particularly retirement and death of partner. Right? So starting with it, with the multiple choice questions. Abhishek, Rajat and Vivek are partners, sharing profits and losses in the ratio of 5:3:2. If Vivek, who is the Vivek? The last one. This person retires. Okay. The new profit sharing ratio between Abhishek and Rajat will be, what is left there? 5:3. The old profit sharing ratio among Rajendra, Satish and Tejpal is 2:2:1. The new profit sharing ratio is on Satish's retirement is, who is Satish? The second person, right, has retired, and the new ratio is 3:2. What is the gaining ratio? We know that the gaining ratio is NR minus OR. So what is NR here? First case 3/5 and second case 2/5. Okay. And who has retired here? Mr. Satish, who is the second person. So I remove this. So what is the old ratio? 2/5. And his the last one is 1/5. So 3/5 minus 2/5 will be 1/5, and 2/5 minus 1/5 will be 1/5. So the gaining ratio will be 1:1. Anand, Bahadur, Chandar are partners sharing profits and losses equally. Okay. On Chandar's retirement, who is Chandar? The last person. Okay. So last person ka ratio kya tha? Equally 1/3. Okay. So now on Chandar's retirement, his share is acquired by Anand and Bahadur in the ratio 3:2. That means his share was 1/3, and now it is acquired in the ratio 3/5 and 2/5. So that means it will be 3/15 and this will be 2/15. Okay, done. Now, how to find out the new ratio? You know that new ratio is equal to old ratio plus share gained. Okay, so what was the old ratio? It is 1/3 and 1/3. Now plus, what plus? 3/15 and 2/15. So if I convert this to 15, it will be 5/15. So 5 plus 3 will be 8/15. And here also, if I convert this into 15, it will be again 5/15. So 5 plus 2 will be 7/15. So the answer is, the new ratio will be 8:7. Next. In the absence of any information regarding the acquisition of the share in the profit of the retiring or the deceased partner, the remaining partners, by the remaining partners, it is assumed that they acquire his or her share in old ratio only, because this is even this we followed in the admission of partner, where if they do not mention how the old partners have sacrificed or in which ratio the old partners have sacrificed, we assume that they have sacrificed in the old ratio only. Here also we assume that they acquired the share in old ratio only. Okay, so next, moving on to next question. On retirement or death of a partner, the remaining partners who have gained due to the change in the profit sharing ratio should compensate. See, if you limit yourself, ಅಂದ್ರೆ ನೀವು ನಿಮ್ಮನ್ನ ನೀವು ಇದು ಪಿ ಯು ನಾಲೆಜ್ಗೆ ರಿಸ್ಟ್ರಿಕ್ಟ್ ಮಾಡ್ಕೊಂಡ್ರಿ ಅಂದ್ರೆ ನಿಮ್ಮ ಆನ್ಸರ್ ಸರ್ಟನ್ಲಿ ಏನ್ ಬರುತ್ತೆ ಅಂದ್ರೆ ರಿಟೈರಿಂಗ್, ಬಿಕಾಸ್ ನೀವು ಎಲ್ಲ ಪ್ರಾಬ್ಲಮ್ ನಲ್ಲಿ ಏನ್ ನೋಡ್ತೀರಾ ಅಂದ್ರೆ ದ ರಿಮೈನಿಂಗ್ ಪಾರ್ಟ್ನರ್ಸ್ ಹ್ಯಾವ್ paid to the or compensated the retiring partner. But actually the answer is this one, that is remaining partners as well as the retiring partner. That means the thing is, say if you look at the journal entry, it is gaining to sacrificing. Who all have sacrificed, they need to be compensated irrespective of who is he, retiring or remaining. Then next is amount due to deceased partner is settled in the following manner. All of the above, because you can make immediate payment, you can transfer it to loan, or you can pay half and you can pay another half in the form of loan, or if you can transfer that to loan. Sorry. Deceased partner share of profit may be calculated. Yes, it can be done. It can be calculated on the basis of last year profit. For this, you need to look at the example number 9 or 10. I think it was last example in the old question bank, which was based on last year's profit. Sorry, there were many problems. Sales was the last problem. Then average profit of past 5 years. Also, the answer is all of the above. Items to be considered while calculating the amount payable to the deceased partner, all, because you take by balance brought down, by general reserve, by profit and loss, suspense account. So that's why the answer is all of the above. Accrued profit is ascertained, again same, all of the above, same repeated it is. Amount payable to the executor of the deceased partner is transferred to, payable is transferred to executor account. Again, this question is little tricky. The reason is, see, at what stage it is very important, because if it is after the preparation of deceased partner's capital account, it should be transferred to executor. If it is after preparation of the executor account, then it should be transferred to executor's loan account. So we assume here that it is after preparation of executor's account. Next, coming to fill in the blanks. Okay, first, dash ratio is used to, see, when it comes to accumulated profit, it will be old ratio, there is no doubt. Then profit or loss on revaluation, again no doubt, it will be old ratio. New ratio minus old ratio is gain ratio. How you need to remember? See, first you remember this SON. What is this? Sacrifice ratio is equal to old minus new, right? Then if you remember sacrifice is equal to old minus new, then gain ratio will be ulta. That is new minus old. Next, accumulated losses are transferred to the capital accounts of the partners at the time of retirement in their, again it is in their old ratio only, because accumulated losses at all are yes, all are the one which were before that event, so old ratio only. General reserve is to be transferred to all partners capital accounts at the time of retirement, because all were part before retirement, and after retirement one person will go. In the absence of any instruction, retiring partner's capital account is closed by transferring the balance to retiring partner's loan, if you don't say anything. Then dash ratio is used for continuing partners adjustment of continuing. Normally it is new ratio, but I don't completely agree with it, because if you see the three problems which were there in the old question bank, where the capital adjustment was there, even it is possible that there can be agreed ratio also, right? So only new ratio will not be the right thing as per my knowledge. X and Y, X, Y and Z are the partners sharing profits and losses in the ratio of 3:2:1. If Y retires, who is the Y? This one, middle one. So if he retires, the ratio will be 3:1. Very simple question. Share gain, it is calculating by deducting old ratio from new ratio. Very simple. Old ratio from new ratio. The ratio in which remaining partners share the future profits means it will be new ratio. Future profits, how we share? New. See, that is what we call it. If somebody asks you what is new profit sharing ratio, the ratio in which future profits are shared, that is called as new profit sharing ratio after the reconstitution. The balance in the retiring partner's loan account is shown on the very simple liability side of the balance sheet till the last installment, because see, till it is paid, it is payable. Payable means liability. Liability should appear on the liability side of the balance sheet. Then the balance in the retiring, the amount paid to the retiring partner in excess. See, if you remember yesterday we discussed the same thing. If anything is paid by the admitting partner in excess of his capital share, that was called as hidden goodwill, and here it is same. In case of retirement, if you are paying something excess of what actually need to be paid, then definitely it is called as hidden goodwill. In the absence of any agreement as the disposal of amount due to retiring partner, see about this section 37 speaks, remember. Then executors of the account, executor's account is generally prepared at the time of, very simple here, at the time of death. Next, accounting treatment at the time of retirement and at the time of retirement and death is, you can say same, better we call it as similar. And if they have given same also it is okay, but I find it similar, not exactly same. Then the period from the date of last balance sheet and the date of partner's death is called as intervening period ಅಂತಾರೆ. ಇದಕ್ಕೆ ಏನಂತಾರೆ? ಮಧ್ಯಂತರ ಅವಧಿ ಅಂತೀವಲ್ಲ ನಾವು ಅದೇ intervening period it is. Then dash account is debited for the transfer of accrued profit. See, you need to understand what is accrued profit. P&L suspense. Okay, it appears on the partner deceased partner's capital account. So deceased partner's capital account is credited. Then P&L suspense account will be debited. So it will be P&L suspense. Okay. Next, amount payable to the executor of the deceased partner is transferred to, very simple, executors of the deceased partner is executor's loan account. Done. Next, match the following. You know that gaining ratio is new minus old, very simple, right? Then next is new share is equal to old share plus acquired share. Okay. Then next is section 37 speaks about disposal. Anything mentioned here about? It says that the outgoing partner receives 6% interest in case of delay. Then next is executor's account. Executor's account at the time of death of a partner. Then what remains is amount due to deceased partner is transferred to see here there is it is contradictory. That is, if you see amount due to deceased partner is transferred to deceased partner's loan, so it will be like that. Then next is gained share. Gain ratio is required for contribution to retiring partner's share of goodwill. It will not be. You can make it, see, gain ratio A for A6 and gained share is, see, new minus old. So you need to make little change. Otherwise I will make it once again. First, gain ratio, gain ratio is required for contribution to retiring partner's share of goodwill. Then gained share is new share minus old share. Then new share is equal to old share plus acquired share. Then executor account is prepared at the time of death of partner. Then section 37 speaks about 6% interest when there is a delay, and amount due to deceased partner is transferred to executor's account. See, here it is deceased partner means executor. If it is executors, then it should go to executor's loan account. Next, what do you mean by retirement of a partner? Right? See, very simple. The retirement of partner is when a partner terminates his relationship with the firm during his life. When he is alive, and if the relationship terminates, it is called as retirement of partner. Okay. Then give the formula for calculating gain ratio. We know that new ratio minus old ratio, new share minus old share. Why the gain ratio is required on retirement of a partner to distribute goodwill. Remember, to distribute goodwill. Then to distribute the goodwill is very right one. Then why the new ratio is required on retirement of a partner to share future profits and losses. Then give the formula for calculation of NPSR on retirement of a partner. Very simple. New share is equal to old share plus share gained. Very simple. What do you mean by hidden goodwill? If actual payment made, or if we can say, if the actual payment is or if you have made very simply, if you need to put it in a very simple manner, it should be hidden goodwill is, if you actual payment, assume that if the actual payment is 10,000, right, and it is payment made is 15,000, the 5,000 is considered as hidden goodwill. Okay, how can this get? If the payment made to the retiring partner is in excess of the actual payment, then it is called as hidden goodwill. Then, when do you prepare executor's account? At the time of death of partner. How do you close executor's account? By transferring it to executor's loan account. Sorry, this should be executor's loan account. Okay, next. Who is an executor? The legal heir, very important. The legal heir of deceased partner is called as executor. Okay, Varasdar antivalla navadu. Then, which account is credited for the share of accrued profit of a deceased partner? Which account is credited for accrued profit? We seen it earlier that the journal entry will be P&L suspense to deceased partner's capital account. So the account which is credited here, credited is deceased partner's capital account. What is intervening period? The intervening period is the period between last balance sheet and the date of death. Very simple. Next, true or false? Profit or loss on revaluation is transferred to all partners. Yes, in case of retirement and death, it is true. Accumulated profit is transferred to continuing partners' capital account. False. It is transferred to all, as we said above. Adjustment of capitals of the remaining partner is to be made in new ratio. Here it is true, but I said even it can be at agreed ratio also. New ratio is equal to old ratio plus share sacrificed. False, because it is old share plus share gained. Share gained is computed by deducting old share from new share. Yes, I say yes to this, because new minus old will be gain. Increase in the value of asset is debited to no. When there is an increase in the value of asset, it will be profit. Profit means it should be credited. So it is false. Then next. Section 37, that's no I said 37 6%. It will be true. Okay. Then deceased partner's claim is transferred to his executor's account. This is true. If executor's claim, then it should be transferred to executor's loan account as per board's clarification. Now, deceased partner's share of profit for the intervening period will be calculated on the basis of last year's profit, average profit of the past year. So, true. That's what we learnt in the true or false also. MCQs. Deceased partner may be paid in lump sum or in, yes, true, you can choose any way. Retirement normally takes place at the end of accounting period. Yes, retirement can be planned. Okay. Whereas death can occur at any time. We know this very well. Death is uncertain. Okay. Amount payable to the executor of the deceased partner is transferred to executor's loan account. True, because it is executor, then executor loan. If it is deceased partner, then here it will be executor. Okay. Then, now coming to 2 marks. Lots of 22 marks questions have been added this time. Now let's answer each one by one. First, mention any 2 circumstances of retirement of partner. Age, sickness या health issues हम बोल सकते हैं. Then, what is gain ratio? The ratio in which, remember, the ratio in which continuing partners gain the share of the retiring partner is called as gain ratio. Very simple. State any 2 difference between sacrifice ratio and gaining ratio. Very simple, 2 differences. It is calculated at the time of admission. It is calculated at the time of retirement. Okay. Now, formula for this is old minus new, and formula for this is new minus old. So, very simple 2 differences. State any 2 purposes for calculating new profit sharing ratio. Number 1, to adjust the capitals. Number 2, to share the future profits and losses. How do you close the revaluation account on retirement of partner? By transferring it to loan account. Okay. Next, mention any 2 mention any 2 modes of disposal of amount due to retiring partner. You can pay it by cash or check, or cash through or bank, or you can transfer it to the loan account and pay it in installments. Then, or lump sum you can pay. Then, pass the journal entry to close the retiring partner capital account when the payment is made immediately. Then it will be RPC, that is retiring partner's capital account debit to cash or bank account. Give the journal entry to close retiring partner's capital account when it is transferred to loan account. It will be RPC to RPL, that is retiring partner's capital to retiring partner's loan account. Give the journal entry to close revaluation account when there is profit. It is revaluation to all partners capital, and when there is loss, all partners capital account debit to revaluation account. Then, why do firms revalue assets and liabilities on retirement? Because the retiring partner is entitled for his share of profit or loss in on revaluation of assets and liabilities. So, to ascertain that revaluation, to profit or loss on revaluation, we do the revaluation of assets and liabilities. One of the important reasons, that is, the retiring partner is entitled for the share in the revaluation profit or losses. If you remember, in the retirement of partner, in the because you people will be very good in practical, so you write by revaluation account. That means that he should also get that. If you have to get that, you need to revalue. Then, next is, why retiring partner is entitled to share the goodwill of the firm? Because the profits earned in the past are the result of hard work of all the partners, or it is because of all the partners the firm has earned profits for so many years. So he is entitled for the goodwill. Okay, so efforts is from all the partners. That's why he is entitled for the goodwill. Or you can even put, because that is not mentioned in the NCIT, that's why I'm not putting it. So the goodwill is earned over the years, or with best surveys, we have learnt so many factors affecting the goodwill, and that is because of the efforts of all the partners. That's why he should get his share of goodwill. Pass the journal entry for deceased partner's share of profits for the intervening period. So it will be P&L suspense. We passed it at the time of MCQs also. P&L suspense account debit to deceased partner's capital account. Give the meaning of accrued profit. The profit earned between the last balance sheet date and the date of death. Next, the profit earned between the last balance sheet date and date of death. State any two differences between retirement and death of partner. See, retirement generally happens, it can be planned and it happens generally on the last date of the accounting year, whereas death can happen at any time. Okay, so this is one difference. Okay, another difference what you can create here. Now, at the time of retirement, the amount is paid to the retiring partner only, but at the time of death of partner, the amount is paid to the executor of the deceased partner. Right? Any two ways of settlement of claims of the deceased partner, again same, you can pay it immediately, or you can transfer it to executor's loan account. Then, or partly cash, partly loan. Write the journal entry to close the deceased partner's capital account. Right? It will be deceased partner's capital account to executor account. Okay? Done. Past journal entry for transfer of accrued. Already we have done this, I think. Past journal entry for the deceased partner share of profits for the intervening period. The same entry will be passed here again, accrued profit of the deceased partner. Okay, then next is write a journal entry for cash paid immediately to the executor of the deceased partner. It is executor account debit to cash or bank account. Next, how do you close executor's account when the payment is not made immediately? It will be executor's account debit to executor's loan account, or you can write it in a statement by transferring it to executor's loan account. A, B and C were partners sharing profits and losses in the ratio of 5:4:1. The profit of the firm for the year ending 31/3/2024 is 12,000. B dies on 36. It means 3 months he lived. Okay. Then calculate B's share of profit from 1/4/2024 to 36. That is for the 3 months. We know that total profit is 12,000. Okay, total profit is 12,000. And how many months he lived? 3 months. I think into 3 by 12 will give us 3,000. And what is his share? That is 4 by 10. I think that comes to 1,200 rupees. Because it will be 3,000, 0 will be cancelled, 300 into 4 will be 1,200. Next. Give the journal entry when retiring partner's whole amount is treated as loan. It is same. Oh, it is retiring partners. Okay, retiring partners means it will be retiring partner capital account debit to retiring partner's loan account. Next. Pass the journal entry when retiring partner is partly paid in cash and remaining is treated as loan. So it will be retiring partner's capital account debit to cash or bank to retiring partner's loan account with the required amount. Then P, Q and R are partners sharing profits in the ratio 3:2:1. R retires and the balance in his capital account after making necessary adjustment and workout is 60,000. P and Q agreed to pay him 75,000 in full settlement of his claim. Find out the hidden goodwill. Very simple, it will be 15,000. Difference between 75 and 60. So this was all from the chapter retirement and death of partner, and in our next session we will be looking at the dissolution of partnership firm, and even that is also a very relevant chapter. And if we complete that, we will be completed with the first book, and then we will jump into the next book and we start with the company accounts. Okay, so if you like this video, kindly you can subscribe my channel, you can share it with your friends, and you can write your appreciation in the comment box or any suggestions you like to give. Thank you very much.